Company Limited has discovered 162 illegal pipeline connections and illegal refineries in the Niger Delta, mostly in Bayelsa State. This was made known in a documentary shared via its social media handle titled War on Crude Oil Theft, stating that the illegalities were discovered using a maritime intelligence system. 93 illegal pipeline connections and 69 illegal refineries were discovered from Abua and Bakuda between July 15 and 21st, which had been destroyed. 27 pipelines were vandalized, while wooden boats, trucks, and those arrested were about 30, adding that the vandalized pipelines were being repaired. And the Corporate Affairs Commission says it will delist more than 100,000 inactive companies on its database on account of failure to comply with the Commission's obligations. Registrar of the Commission, Mr. Garba Abubakar, said the companies are to be delisted from the Commission's register for not publishing returns to the government. Mr. Abubakar said this in Kano during a workshop put together to sensitize civil society members, the media, security agencies on the use of the beneficial ownership register. He said the law is clear on procedures and that any firm that does not file its return is considered not existent or inactive and is subject to delisting, while starting with the names of companies will be published on the Commission's website and will be given 4 weeks to react before being removed from the CAC data. The registrar maintained that after the first 100,000 companies are delisted, another batch of no fewer than 100,000 defaulting companies will be compiled. And tax administrators, professionals in the taxation business want government to institute an efficient tax system that will build on a good legal framework, which will in the long run increase the tax base and revenue generation for the country. This was call was made at the Tax Business Series with theme Finance Act 2023, implications for the tax and fiscal outlook of a new administration and the economy. Speaking during the event, partner PricewaterhouseCoopers, Mrs. Siri Agbeyi, applauded government's efforts aimed at striking a balance between fiscal stability and economic growth while addressing emerging challenges across the globe. Associate partner at Details, Mr. Anthony Ezeamaka, also wants government to introduce policies based on the long-run returns to capital, which will encourage productivity.
Government should focus on taxing consumption more than production. If you leave so much focus on taxing production, what that does is that it causes a rise in inflation, in production of goods and services. So government needs to work on that.
We also looked at how this is impacting on the inflow of investments. So some of the issues around perhaps tax refunds, which are not happening as we should see them, trying to address those at source is critical. Otherwise, we will be increasing the debt of the nation because we owe a lot more private sector players. So there are certain amendments that have to be done within the Act to make that happen. We have to harmonize our tax system as well so that there isn't this multiple level of taxation. We need to go back into the Constitution as well and look at the powers of all of these different tiers of government.
The government is listening. The government is listening to the business community. They are listening to the organized private sector. And we could see that in the executive order that President Bola Ahmed Tinubu signed upon assumption of office, suspending the implementation of the Finance Act of 2023, pending further stakeholder engagement with a view to having it resume on the 1st of September 2023. That tells everyone that they care about business, they want businesses to grow, they want businesses to thrive.
Asian stocks were 5 months high and the yuan extended a sharp rally today with speculations that the Bank of Japan could take another small step towards dismantling its super easy stimulus policies. MSCI's broadest index of Asian Pacific shares outside Japan fell 0.4%. Japan's Nikkei opened 1.4% lower, though bank shares surged to an 8-year high on prospects of rising interest income at lenders. S&P 500 features and Nasdaq features added 0.2%, helped by aftermarket jump in shares of Intel, which reported a surprise quarterly profit. In the currency market, yuan was holding about 0.5% high at 138.83 per dollar in early trade. Euro slipped near 1% overnight and notched losses at $1.09 today. US 10-year yields rose 16 basis points and broke above 4%, steady at 4.01% in Asian trade. Russian President Vladimir Putin says Russia's African trade reached $18 billion in 2022, which was necessitated by the first Russian-African summit in Sochi, Russia in 2019. He said that the ongoing Russian-African summit and economic and humanitarian forum in St. Petersburg, President Putin said that Russia's government, business, and the public were sincerely interested in further deepening multifaceted trade, investment, and humanitarian ties with Africa. Russian trade with African countries in agricultural products increased by 10%, amounting to $6.7 billion, and had already demonstrated record growth between January and June by 60%, while stating that Russia exported 11.5 million tons of grains to Africa in 2022 and almost 10 million tons in the first 6 months of 2023. Meanwhile, the African Export-Import Bank have announced a credit limit of $30 billion to support African investors willing to exploit the opportunities in Russia. And finally, in business, the European Central Bank has raised its key interest rates by 25 basis points, curb inflation, diverging from U.S. Federal Reserve's decision to pause its own hikes. The latest move completes a full year of consecutive rate hikes in the Eurozone after the ECB embarked on its journey to tackle high inflation last July. After the rate hike, the interest rates on the main refinancing operations on the marginal lending facility and on deposit facility will be increased to 4.25%, 4.50%, and 3.75% respectively, with effective from August 2nd.
Inflation continues to decline, but is still expected to remain too high for too long. We are determined to ensure that inflation returns to our 2% medium-term target in a timely manner. The Governing Council, therefore, today decided to raise the three key ECB interest rates by 25 basis points. The rate increase today reflects our assessment of the inflation outlook, the dynamics of underlying inflation, and the strength of monetary policy transmission. The developments since our last meeting support our expectation that inflation will drop further over the remainder of the year. Our future decisions will ensure that the key ECB interest rates will be set at sufficiently restrictive levels for as long as necessary to achieve a timely return of inflation to our 2% medium-term target.
That's business news. I'll see you at the top of the hour for Business Nigeria. Next is sports.